Morning, everybody. Hope everyone's having a fantastic Wednesday. Hope everyone's keeping an eye out for the Fed's meeting regarding the interest rates and whether tapering is going to begin, whether the interest rates are going to go up. So keep an eye out for that later today. Looking at the cryptocurrency markets, it's up by almost 3% to $2.2 trillion market cap. After yesterday, there was a decrease in the value of cryptos due to just the general bad news, the expectations that the Fed is going to hike interest rates, that tapering is going to begin, and the fact that there was the first death in the UK relating to the Omicron variant. The prices have recovered, the bulls have started getting into the market, they've started buying the dips, and we can see all across 3% for Bitcoin, 2.5% for Ethereum, 9% for Solana, which decreased dramatically over the past week by 11%. It's slowly starting to make a recovery. Dogecoin up another 12%. This is following the announcement by Elon Musk that Tesla is gonna accept Dogecoin as a payment for their upcoming merchandise. Avalanche is up by almost 16%, Polygon by 10%. So not excessively big increases, but good to make short-term profits, good to take some gains, and it's a recovery from yesterday. We'll take that. One thing I want to look at is the leverage ratio. We see here that the leverage ratio hit an all-time high on the 26th of November for 0.21 almost, and the price was $53,000. There was a rapid shakeout. It decreased all the way down to 0.16, and the price went down from 53,000 to almost 49,000. Both the price of Bitcoin and the leverage ratio are correlated. Whenever there's a shakeout in the market, the price of Bitcoin goes down as well, because if a lot of the positions get liquidated in the market, especially if they're long positions, then the price keeps on decreasing because there's the expectation that prices are just going to keep going down. So if someone has, or if a group of people have long positions at, let's say, $53,000, which was the point of max pain, and the price of Bitcoin is now 55,000. If it goes down to 52,000, all those leverage positions, they go down because it reached their margin call. If the leverage positions go down, then the positions get liquidated and they lose all their money. That signals a bearish sentiment in the market, and people start selling even more and more, and the price follows as well. We can see that the leverage ratio went down to 0.16, which is a big drop from 0.20, but it made its way back up again. I think leverage is only going to keep increasing with a lot of derivatives products in the market being offered by various companies, and this will cause the leverage ratio to go up and up. And we'll see more drastic changes in the price of cryptocurrency, especially in Bitcoin, when these positions get liquidated. So good to keep an eye out on this indicator. It's gone down slightly, but it's still quite high. Moving on to the Fear and Greed Index, it's at 28. People are fearful that the crypto market's going to crash, given that the Fed is going to most likely start tapering or increase the rate of tapering. They're going to decrease their bond purchases by, they say, between $15 and $30 billion a month, which is incredibly massive, and also increase interest rates. And when they increase interest rates, less easy money in the market, and when there's less easy money in the market, there's less money available for people to invest in assets like crypto. So people are fearful. That's why the markets aren't moving much. And if the markets move, it's usually in the negative territory. If it doesn't really move much, it goes laterally, and people are either holding or selling a little bit, seeing what's going to happen in the market. They're like, is it going to go up? Is it going to go down? Let me just wait to see what's going to happen. And if we compare, Fear and Greed Index is 28. Last month it was 72. People were greedy because the crypto market was very, very healthy. The price of Bitcoin had gone up to 69,000. People are going to think, oh, it's going to the moon, it's going to 100,000. And then a couple of bad news plus the leverage shakeouts brought the price down to 48,000. And from greed, it's very easy to go to fear. And yesterday people were extremely fearful because the price dropped even more. People weren't expecting that. Moving on to the news, I was scared yesterday, in a good way, because when I opened my Trust Wallet account, it said that I had 126 million USD, but I knew that wasn't true. But there was a rush of adrenaline at the moment, and I'm like, can I cash this out? But obviously I couldn't. There was a glitch in several exchanges where the price of lots of cryptocurrencies just shot up by 400 million%, 500 million%. The market cap ran into trillions of dollars of each individual crypto. And I think the total market cap for crypto went up to $15 quintillion, which is more than the entire money supply in the world. So a price glitch on the tracking sites, which is CoinMarketCap, saw crypto market caps run into the trillions of dollars. The glitch has been fixed, but some of the turbulence remains. This glitch wrongly displayed cryptocurrency trading prices, but was solved nearly an hour after. And as an example, Bitcoin's price went from 48,000 to 8.6 million. And if you open your accounts at that time, you would think, oh man, I made it, I'm a crypto billionaire. But it's just a glitch. It's unfortunate these things happen. They're algorithmically ran. There was an error in the algorithm. Chainlink co-founder Sergey Nazarov to recommend that decentralized alternatives provide pricing data. What happens now is that all pricing of cryptocurrencies uses a single source of data or a single oracle. They usually get information from different exchanges. They collate that information and they put it in a way where it's a centralized way of displaying that information. Relying on single sources leads to errors like this, leads to glitches like this, because one oracle means that there's 1 point of mistake, and if there's 1 point of mistake, whenever there is one mistake, the whole system becomes compromised. However, if it's decentralized, if there are several oracles, if one of the oracle gets compromised due to a glitch, there are other oracles to back them up, and it won't affect the pricing of the cryptocurrencies. So BCB Group is a crypto dedicated payment services provider, and they have acquired a fintech focused bank, Bank, and they gained control of the German bank to drive its expansion in the EU. The terms of the deal required approval of the German regulator BaFin. The details of this deal weren't disclosed, but given that Germany is such a crypto-friendly country, I see no reason for this approval to be denied. I think this will be approved, and the BCB Group expects the transaction to be cleared by the end of February. It says that adding a fully licensed bank to the group will enable BCB Group to provide its services to its clients in the EU and drive growth across its business line, which makes sense if cryptocurrency dedicated companies such as BCB Group, they want to expand into the EU, purchasing an existing bank and incorporating their technologies into the group is a very clever way to do it. If you look at the BCB Group, they're a multi-currency transaction banking solution provider, and they provide institutional payment services even. They're a partner of choice because their platform supports major world currencies such as the pound, the euro, and the dollar. They have all the major network payment coverage and approval from different financial regulators in the UK, in the European Union, and they provide support wallets and custody for major cryptocurrencies, stablecoins, and other digital assets alongside fiat currency accounts. So what interests us more is this forex and crypto exchange. They convert any supported fiat or cryptocurrency position to any other fiat or cryptocurrency on the platform at market bearing rates. If this deal goes through, it's just going to make it easier for people in the EU to make fiat to crypto transactions, crypto to fiat transactions, or crypto to crypto transactions in a more regulated manner. In news relating to Asia, Binance and the MDI-led consortium are to create crypto exchange in Indonesia. They've already set up a joint venture account that will focus on blockchain development in the country. So MDI is the venture capital arm of Indonesia's largest telecom company, Telkom Indonesia, which is state-owned. Given that it's a state-owned company, it's very, very likely that they'll get all the approvals from regulators and they'll be able to run this exchange without any hassles. MDI Ventures are probably going to work on the legal side and their introduction into the Indonesian market, while Binance will provide the infrastructure and support for the new exchange. So it's going to be interesting because Indonesia is a country with a population of more than 250 million people, and it's going to open up a wide array of crypto services to a country where most people are unbanked. And cryptocurrencies are a good way for people who are unbanked to get access to funding, to get access to payment services, decentralized finance solutions. So it's going to be interesting to see, and this could be the start of a major boom in blockchain and cryptocurrency in Indonesia and in Asia in general. In other very interesting news, SEBA Bank, which is a Swiss bank, launched a regulated gold token to enable digital ownership of physical gold. That digital token is backed by physical gold and it's exchangeable for delivery. So if you hold their gold-backed token, you can go to the bank, you can say, here are my tokens, can I have physical gold? And they'll have to give you because it's backed by physical gold. SEBA claimed that due to its regulatory compliant nature and the low volatility of gold prices, the gold token could eventually be used as a stable coin for on-chain transactions. It bears to see that people are really scared of buying physical gold because of theft, because of the difficulty in storage. So this could be a very, very good alternative to buying physical gold because it's backed by gold. If you want, you can go to the bank and give your tokens, and then you can get the equivalent amount in gold. It's redeemable directly from refineries on demand at any time. Our gold token removes the frictions of owning gold for investors and provides a cost-effective solution of owning the asset fit for purpose in the new economy. So we all know that gold is usually seen as an inflation hedge. People usually keep gold as an asset in their portfolio in order to combat inflation. This is going to change the gold industry because it's instead of holding physical gold, people will have the ease of, from the comfort of their home, they can buy this gold-backed token. It's going to become a stable coin for gold, and instead of trading physical gold, the gold will remain in the bank's vault, and you will have the tokens. But when you have the tokens, you essentially own part of that vault. This is going to be a fantastic, fantastic way of hedging against inflation. In other news, HSBC and Wells Fargo are using blockchain to settle forex trades. They're finally adopting blockchain technology. Baton Systems, the company behind the core FX distributed ledger technology, said on Monday that these two banks are using their platform to settle trades using real currencies and real accounts in less than 3 minutes. This is very, very, very quick because it eliminates the need for intermediaries, because using smart contracts, these transactions take place almost in real time. It avoids passing trades through the CLS, which is a third-party bank widely used in the settling for FX trades, adding that such rapid settlement between two banks cuts exposure and settlement risk. So we can see that more and more banks are adopting cryptocurrency, more and more banks are adopting blockchain technology in order to enhance their already existing services. It's going to be interesting because it sets a precedent for other banks to adopt similar technologies. As more banks and more financial institutions and more companies in general adopt blockchain technology, the more cryptocurrencies are going to be adopted and accepted as well, because they all form part of the same ecosystem, if you will. I just want to talk about NFTs. Nike just bought a virtual shoe company that makes NFTs in sneakers for the Metaverse. The company RTFKT, they make sneaker NFTs and they make actual shoes as well, except these only exist digitally. RTFKT claims that in February, a collaboration with teenage artist Ferocious to sell real sneakers paired with virtual ones managed to sell some 600 pairs /NFTs in just 6 minutes, netting 3.1 million at a time. If these 600 pairs of NFTs are able to sell in 6 minutes, it just goes to show that there's a lot of demand for NFTs. And Nike are a massive company. They're a top 500 company in the US. They're not dumb. They're seeing this and they want to get into this early. They want to get into the metaverse really, really early. So they bought RTFKT, they added them to their portfolio, and with their resources and with their expertise, they're going to only expand. The opportunities are endless. The opportunities are really endless. With their reach and with their partnerships, such as with people like Michael Jordan, they could be able to use those or leverage those connections in order to create NFTs in collaboration with those celebrities and sell them for massive, massive profits. These are in high, high demand. In other news, Bill Gates predicts that most meetings will move to the metaverse within 3 years. Most people now are working from home. The whole concept of work is changing, and even Bill Gates, who is the founder of Microsoft, who is a disruptor himself, can see that most of the meetings, they don't need to take place in the office. If you have a VR set, if you're in the metaverse, it could take place in the metaverse, and it will feel like it's taking place in real life. He also said that he's really interested in how technology can create more spontaneity with remote work moving forward, and meetings in the metaverse is the first step. So it's very interesting because even the old-timers like Bill Gates, they're starting to embrace the concept of the metaverse. When Facebook changed its name to Meta, everyone thought it was a publicity stunt, but now we see that metaverse is gaining popularity, is getting adoption, and even Bill Gates is seeing most meetings, at least in Microsoft, to take place inside the metaverse. The metaverse is here to stay. It's not going anywhere. It's just going to expand. And the possibilities in the metaverse, in the digital space, in the digital world, is only going to increase going forward. With that, That's the video for today. Thank you very much for watching, and I will see you tomorrow for another one. Cheers.